Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended February 18th, 2017. Re-dollarization. Greece to ditch euro for dollar. Today we're going to be talking about a concept of re-dollarization. Now there has been an echo chamber about de-dollarization and the collapse of the dollar over the last 5 or 10 years, and people take that concept, the de-dollarization concept, as an inevitable fact. Well, today we're going to go through some facts and circumstances that indicate that perhaps that's not true and we may be embarking on re-dollarization. Now, you're going to have to think different for those of you Apple fans out there in order to capture the understanding of what I'm going to say here. All right. So there was a story that Trump's pick to be U.S. ambassador to the EU. His name was Ted Moloch. He was saying Greece may dump the euro in favor of the dollar. Now this guy, Ted Moloch, is against the EU. He's a big Brexit fan. So, he's pushing for basically the breakup of the EU, and he thinks that Greece would be better served if it would just default on its debt, not have to pay the EU back, I suppose, and adopt dollars. All right. There's a link below. That's not really the point of this story. It just triggered my thought process on the dollar, gold, euro, Chinese yuan, the whole de-dollarization concept. Now, part of the de-dollarization trend is, first of all, European nations, not European nations, Eastern nations, including China and Russia, Iran, became very perturbed at the United States when they started QE. That was a direct assault, especially on China, who had accumulated large amounts of dollars in its trade agreements with the United States. And then the United States got into trouble and just decided the Fed was going to print up trillions of dollars to cover the difference and was going to buy back treasuries and basically pay nothing for them other than just printing the money, whereas China had earned their over $1 trillion U.S. Treasury portfolio. So you can see how the world is not happy with the United States basically dictating what happens in the world. However, that's what the United States has been doing since 1944. Because for those of you who know, when the United States went off the gold standard in 1971, you don't think that the countries that signed up to the Bretton Woods Agreement, who were entitled to bring their dollars to the U.S. Treasury under the agreement and get gold in exchange for them, were happy when the U.S. said, no, we're not going to do that anymore? Well, in fact, the U.S. was very flip, and Treasury Secretary Connolly at the time, when he met with his EU counterparts at the end of 1971, he famously said, about the dollar, it's our currency and your problem. Now, that type of arrogance can only be either a fool has that type of arrogance or one who knows that the person or the country, the entity that they're relaying that message to has no other choice. And we may be still in that situation with the United States. So, if the petrodollar becomes less relevant or goes away, what might replace it? And we're hearing stories, SDR, gold. No, I say perhaps it might be the dollar, based on increased military strength and new geopolitical arrangements. We're going to get into what I'm talking about in just 1 second. Let's just talk about de-dollarization. So there has been many, and there is a link here, and I go through all the de-dollarization efforts. We talk about the establishment of the AIB. We talk about the Chinese setting up yuan clearing places so that the yuan could be used in international transactions. We talk about China and Russia adding gold to the reserves as opposed to adding more U.S. treasuries. So there definitely is a de-dollarization effort underway. However, that doesn't mean that it is somehow destined to succeed. And I think that's where the alternative media has just gone off the deep end and just assumes that this de-dollarization campaign is irrevocably going to happen and that the dollar is going to collapse, just like in 2016 we were going to run out of silver. In 2016 we were going to have a collapse. In 2015 we were going to have a collapse, Shemitah. a lot of these stories, they sound good. And when they don't happen, people just say, oh, well, we're early and it's going to happen next year or the next year. Well, eventually, yes. The United States won't be a country. You'll die. The iPhone you have will break. Yes, things eventually end. But this concept that somehow it's inevitable just because you spot the possibility is something I try to stay away from. So de-dollarization, actually, I'll quickly take you through this blog post I wrote, looks like 2 years ago. Uh, so in the de-dollarization camp, the Asian Infrastructure Bank was set up. That was a big deal. China eventually got included the yuan into the SDR. China set up an alternative payment to SWIFT, the CIPS. They created these yuan clearing banks, swap facilities, and the China sold its U.S. Treasury bonds. And we'll see in a second when we go back to the other slide is that China sold even more bonds since 2015. So there has been this gold buying by China. So there's been this big de-dollarization, or maybe it's not even de-dollarization, it's just a reallocation of reserves, because China, it's not in their best interest just to ditch the dollar if they have massive trading with the United States and the dollar. They still hold, even though they sold hundreds of billions of dollars US treasuries, over $1 trillion in treasuries. So there's no benefit in them, at least not in the short term, dumping their dollars and having the dollar collapse, and along with it, their trade and the value of their reserves. So that's one reason why de-dollarization and the dollar collapse is not imminent. It's not like China sits around thinking we're going to collapse the dollar tomorrow. And you hear all these stories about how China just ready to pull the trigger. I don't think so. And they're the same people who say China plays long term. They play chess. They don't play checkers. Well, yeah, then you don't blow yourself up by crashing the dollar by selling all your treasuries in one day. Okay, let's get back to the current state of affairs with the currencies. So I say a shaky euro could strengthen the dollar as world's reserve currency. And we've seen de-dollarization. Countries in the East, including China, again, we're very unhappy about QE. Russia, of course, they were unhappy. They had sanctions put on them. So Russia had even more of a reason to de-dollarize than China, because Russia didn't have any substantial trade with the United States. Their trade was outside the United States. They sell a lot of oil. That's their big deal. So they could care less about the dollar. However, they still have 60, 70, 80 billion dollars worth of US treasuries. Why? Because the other countries that they deal with do deal with the United States, and they need treasuries and dollars to do their international trade. Now, while the share of dollars as a percentage of international transactions over the last 20 years has gone down, it's about 75, 80%. It's gone down to about 63, 65%. But that's stabilized over the last 5 years. And during these last 5 years have been when we've heard the most about the dollar collapse. It's imminent. It's coming in 2014, 2015. It happened. They just keep talking about dollar collapse, unsustainable debt. Well, first of all fiat currency nations have unsustainable debt. But the dollar share of international reserves is holding steady around 63%. And the euro, which was supposed to be, and you hear people, no names, talking up the euro. Well, the euro in 2009, global reserves were 28% in euro, and now they're about 20%. So the euro is on no big trajectory to challenge the United States dollar. In fact, the European Central Bank is in the midst of QE and has instituted negative interest rates. That's not good for a currency. That's not good. You don't want to hold your reserves in a negative interest rate bond. Meanwhile, the euro is facing Brexit, default there, Grexit, a default in Greece, not in Britain. Britain is not part of the euro, but it's part of the European Union, and it basically wanted to leave and voted to leave. Greece may be forced to leave, or may decide to leave, or may not pay its debt, or can't pay its debt. Italy's thinking about leaving. And then there's the rise of anti-EU sentiment in France, led by Marine Le Pen. She said she wants to take France out of the euro and denominate everything back to francs. So The euro is not a stable currency. It's cobbled together by countries where more than half the population wants out. And then you've got Trump, who's favoring Britain. He wants to negotiate NATO costs. So the euro is not on the best grounds to challenge the dollar as an international currency. Meanwhile, the Federal Reserve ended their QE program and they've actually ratcheted up interest rates. Far better to hold U.S. treasuries that pay some interest than any of these European bonds that pay no or have negative interest rates. Briefly, Japan, the only people who buy Japanese government bonds is the Bank of Japan. I mean, the Japanese have no military. They have, talk about debt, they have even more debt than the United States. They've got a demographic issue. So they don't have any potential to be the yen as some type of international currency that people want and trust. They use that for the carry trade. That's about the purpose of the yen in international transactions. China, and a lot of people think, well, China is this and China that, and China is wonderful, and they're going to do this, and they're going to take over the world, and they're going to have the world reserve currency. They're going to back it by gold, and they're lying about how much gold they have, and if they brought all their gold forward, it would be game over, end of dollar. Okay. First of all, if gold isn't part of the international monetary system, it's not game over just because China announces it has more gold in the country that they're going to move onto the People's Bank of China's balance sheet. Now, they have about 1,800 tons. That's their official amount. But we know that they mined 5,000 tons over the past 7-8 years. We know they've imported even more than that. We know that there's more gold in China than is on the People's Bank of China's balance sheet. And therefore, yes, they could have more gold than they say, but if you add all that gold up, it still only gives them, right now they have 2% of their official reserves in gold. Even if they had 10 times that amount, they'd have 20%. They still have massive debt. They still have a lot of problems. In fact, those problems are indicated, and people say, well, wait a minute, look how they're selling their treasuries. And I got a chart here. I've been tracking it for years. Yeah, they are selling treasuries. They've sold a few hundred billion of them in the past 2 years. But take a look at this. They've also been dumping their reserves. Why? Because the yuan is weak. In fact, Trump says they're a currency manipulator. They're trying to weaken the yuan. No, they're not. They're actually trying to strengthen the yuan, and they can't seem to do it, even though they're selling off their foreign reserves. So China's not even close to being a trusted international currency that people are going to use. It may change one day. China may become a different type of international financial power. They may offshore a lot of their work. They may become like the United States is today, where they own half of Africa, half of Eurasia, half of Pacific Asia, and basically reap the benefits that way. But right now, the bulk of China's economic power comes from going into massive debt, building factories, using cheap labor, and then selling the products to Europe and the United States. And that so far has not gotten them to the position of a currency dominance. That may change, but there's nothing on the horizon that would say that's going to change tomorrow. And they're certainly not going to dump $300 billion worth of treasuries in a day just to destroy the United States, because they would in effect destroy their own economy. So yes, one day China, if it continues at its current pace, solves its debt issues, may become a more dominant country, may build its military, and may become the world's dominant currency. But remember, well, maybe you don't, but in the 80s, that's what Japan was going to do. Japan was going to take over the world. Well, Japan got older and that didn't happen. So we'll see. All right. Now, if the petrodollar goes away, surely as the petrodollar dies, doesn't that mean the US dollar dies with it and we have a reset of the financial system involving gold and or the SDR? This is the most popular alternative media narrative out there. We're going to have a reset. There's a collapse and a reset, collapse and a reset. And the dollar dies, and then you get gold, and you have the Scheisse dollar, and you have the SDR, and Jim Rickards. Well, not necessarily. Why does that have to be how it works? How did the dollar maintain its predominance after it went off the gold standard? Well, it instituted the petrodollar. And that was based on offering U.S. military protection to Saudi Arabia. If you click on that link, you can see a whole story on the petrodollar. It was based on offering military protection to Saudi Arabia, and in exchange, Saudi Arabia would and the other Gulf states would price their oil and accept only dollars for their oil. And that created a demand for dollars, and it created the demand for U.S. treasuries because people would hold their treasuries, their dollars in the form of U.S. treasuries. So it was a wonderful system for the United States. Now, people are saying, well, that's going away. There's a lot of reasons why the petrodollar may go away. First of all, the United States has probably now surpassed Saudi Arabia in the amount of oil it produces. It's just starting to produce oil and shale. Saudi Arabia has been depleting its oil reserves for decades now. Also, China buys more oil from Saudi Arabia than the United States. So Saudi Arabia may decide, well, wait a minute, why don't I just take yuan for that? Maybe they don't want to take yuan, or maybe let's say they do. Well, that's the end of the petrodollar. Well, maybe, but maybe that's also the end of U.S. protection of Saudi Arabia. Does China want to get involved with that? Spending money to protect Saudi Arabia? Maybe not. But let's say they do. Okay, so the petrodollar goes away. Well, game over, game over, game over. Collapses here. Not necessarily. The United States can impose the same type of military protection deal on far more countries than just Saudi Arabia. And as a condition, they can say, for our military protection, you got to trade in dollars, wherever you trade. That can include Europe, Japan, South America, Australia, African nations. Now, especially if the U.S. increases its military spending, well, then it's in a position, not necessarily to station troops everywhere, but it's in a position to come to the defense of all of these countries purely in exchange for them using the dollar. Don't think they haven't thought of this, because what worked before was military protection, and that could work again even if the petrodollar were to fail. I'm not saying that the petrodollar is going to fail. I'm not even saying that the United States is working on agreements, but the United States views the dollar, if you go through the CIA documents that have been declassified, the dollar is a matter of national defense. The gold market, when the dollar was tied to the gold market, was a matter of national defense. They're not just going to say, yeah, why don't we use SDRs? That's not going to happen. Not without a fight. And that fight will happen before there's an actual battle. Okay, so what I'm trying to get at here is that there is no inevitability of a dollar collapse other than the philosophical inevitability that everything collapses and everything ends. And just because something is inevitable doesn't make it imminent. Now, all currencies are fiat today. The dollar, however, its strongest point besides the military is it is the most liquid currency. Treasuries are the most liquid asset in the world. So when you hear these guys in alternative, no one wants the dollar, no one wants the dollar. Nonsense. Send them to me, because they do want them. They have them. Yes, they've decreased the percentage of their holdings, but they haven't, quote, dumped the dollar to the point where no one wants it. Now, when you have for you Bitcoiners, this is a good point. When you have a liquid currency, that adds to its attraction. That's why Bitcoin people are always talking about increasing numbers of transaction. The more it gets used, the more it gets used. The more it gets used, the more people want to use it. Well, that's what the dollar is. People who have dollars want to use dollars. People who have assets denominated in dollars, like China, they don't want the dollar to go away and go to zero. So it's almost like they all have a vested interest in keeping the dollar as a reserve currency or as an international currency. Because what else are they going to do? A reset means they lose all of their value. If it's denominated in dollars, well, the dollar has no value. Yes, it does. The dollar does have value. If most of the world's assets are denominated in dollars, it doesn't just flip over into gold or to whatever reset you might think might happen. And by the way, the SDR is an IMF creation, which is a creation out of Bretton Woods, which is a U.S. dominated entity. So when they added China to the SDR, the United States didn't lose one bit of its percentage of the dollar as the percentage of the SDR. So in any event, enough of that. Just wanted to mention that perhaps it's time to stop predicting imminent dollar collapses and COMEX defaults and running out of silver, because we've heard it. Oh, they're just early. Yeah, of course they're early. Maybe they're 10 years early. Maybe they're 20 years early. Maybe they're 40 years early. That's not going to do us any good to be 50 years early, because I don't know how old you are, but that's probably, you won't be around in 50 years. All right. Let's get to the top gold and silver stories. By the way, if you like this type of analysis, or if you don't like it, then obviously you're not going to donate to Smaulgld. You could do so via PayPal or Bitcoin, or you can become a Patreon through the link below and send a small amount each month. All right, top gold and silver stories of the week. So gold and silver both closed basically flat, although silver got a little bit of a gain, so I'm going to give that 8 weeks in a row of rising silver prices. Gold, I'll give it 7 out of 8. It also rose just a small bit. Gold silver ratio is still hovering around 70. Not much movement in the week, but we have had some movement since the beginning of the year. Silver has outperformed gold, so you see it was in the low 70s and now it's in the upper 60s. You want to see that gold silver ratio every day, click on that link and you could see an updated chart. It's actually live, and then there's also 1, 5, and 10-year charts. While gold is doing well, the Dow Jones Industrial is a chart of the week, is also doing well. So the Dow gold ratio is still in the teens, the upper teens, and you see gold going up, but you see the Dow going higher. There's your pitch for PayPal again. All right. So February 13th. U.S. mint sales, so far, I mean, the month is almost over, not as good as January, but that's usually the case. The authorized purchasers buy a lot in January, and then they kind of top up in February, and then you generally see a bigger month in March. But so far, American Gold Eagles are in over 100,000 year to date, and you can go. I do it daily. I'm not going to go through it with you here, but if you are interested in buying gold or silver, please consider doing so through the Smaulgld site, through the banners and links on the Smaulgld site, and also at the links below this podcast. You can compare pricing and shipping. And if you do make a purchase through Smaulgld, it's not investment advice to buy gold or silver, but if you've made the decision to buy gold or silver, please do so through the Smaulgld site. You pay no more, no less than if you visited those sites directly, and Smaulgld gets a very small commission, but it does help out the site. And there's your other. We also track the Buffalo sales on a daily basis, the Platinum Eagle coins, and the America the Beautiful coin sales as well. Interesting, Armenia says it's going to restore its gold reserves. So we are seeing countries in the east, Kazakhstan, Kyrgyzstan, China, Russia, now Armenia, which is almost in the east, adding gold to their reserves. Yellen spoke. She was at the Congress. She was boasting about highest auto sales ever. They're also, auto prices are also the highest ever, and auto debt is also at an all-time high. So I don't know if she should be bragging about that. And auto defaults are on the rise. So I don't know why she considers that a positive sign in the economy, that people borrowed money, subprime people who really shouldn't be taking out money to buy $35,000 cars are buying them and driving the price up and driving their debt loads up. She said the economic policy look is uncertain. Same nonsense. She always says monetary policy is not on a set path. Incoming data and fiscal policy, well, same stuff. More hedging of her bets. You know, the two-handed economist on the one hand, and on the other hand, I think Truman or Coolidge, one of the presidents, said, I want to meet the one-handed economist who give me a straight answer. Fed continues to reinvest proceeds of the stuff that they have on their balance sheet, but of course, at the same time, she's saying that we're going to reduce our balance sheet. Well, you don't reduce your balance sheet by reinvesting everything you have. So their balance sheet is not getting smaller, but they're talking about doing it, but they're not doing it now. And then she's saying, well, what we might do is we won't sell our balance sheet. We'll just let the stuff expire. Okay, well, then let it expire. They're not doing that yet. A congressman asked Yellen about the debt issue. We got 20 trillion in debt. We got hundreds of trillions in unfunded liabilities. They both agreed, yes, the U.S. debt is unsustainable. They recognized the problem, but offered nothing to fix it. No one's going to attack that issue. No one's going to try to reduce the deficit. Not Trump, no politician, not the Fed. They're just going to push it out, push it out. And that gives the credibility to the argument this is unsustainable and the dollar's going to collapse. Yeah, probably. I think the scenario you'll see where the dollar collapses or anything collapses is when you have an entire country collapse. I don't think you're going to have a separate event where the dollar collapses. No, you'll have like the end of the Roman Empire type of stuff. But I don't think that that's imminent. Yes, eventually all empires end. They can't last forever. You can't keep borrowing money forever. But who thought you can borrow $10 trillion? Who thought you can borrow $20 trillion? Well, if you can, why not borrow $40 trillion? Why not borrow 50 trillion, 100 trillion? What difference does it make? I don't know. There's a point where it does make a difference, but I don't know what that is, and nor do the people in the alternative media who keep telling you the collapse is imminent. It's unsustainable. I agree. But where is it unsustainable? I just talking about raising rates in March. Okay, wonderful. And other Fed people are talking about appropriate to raise rates. It's just like they did the last 2 years. 3 times, 4 times we're going to raise rates. And they raise them once each year. Now, I did a podcast about some congressman. I forgot his name. I think his name is McHenry. I do remember his name. And he said that the Fed's got to knock it off with these international arrangements, especially with Trump, America first. They can't be engaged in this. And Yellen said, no, we will continue to coordinate with the Treasury Department. She's basically saying, screw you, we are involved in international transactions because it's part of our mandate. We work with the Financial Stability Board and so on. And we're going to continue to work with our foreign counterparts that share our objectives that the U.S. government must work constructively to ensure a stable U.S. economy and financial system. So she basically said, no, we're going to continue this. I haven't seen if McHenry has responded. He may, but if he doesn't get any backing from the rest of Congress, the Fed continues as it is. Another Fed president, Lacker, we should raise rates sooner than later. I think there was another guy who said, let me just see if I go down. We cover it all at once. He said, I think it was Rhodes, that people are not taking seriously how quickly Fed rate hikes might come this year. I'm like, yeah, because you say it every year and then they don't come. Why do you expect people to believe it now when you say that you're going to raise rates? It must have been last week. Anyway, that's Lacker. Fed should raise rates sooner. Oh, yeah, he said, it was right there in front of me. Markets underestimating pace of Fed rate hikes. Yes, of course they are. Because every year you say you're going to raise rates 3 or 4 times and you don't. So maybe this year will be the year they do 2 or 3. Who knows? PPI now, the producer price index, and as we'll see, the consumer price index were up big time in January. So there is inflation, at least on a monthly basis there, and we'll see what happens in February. So even if they do raise rates, they are proverbially behind the curve. Behind the curve. There's more U.S. Mint sales updates. All right, let's get to more stories. A lot of sales updates. Germany gets its gold back early. I have early in brackets or parentheses because they asked for it in 2013. It's amazing how the story is now they getting it back early on an accelerated basis because it was supposed to take 7 years. No one's questioning anymore. Why was it going to take 7 years to get their gold back? Anyway, not going to go into that now. You can check out this YouTube on YouTube. You can also go to Smaulgld under podcasts and see it. You can go to this blog post, which I'll link below, and you can click on the link. Another Fed guy, Rosengren, we could raise rates 3 times in 2017. You could, but you haven't done it once yet, but we'll see. Re-dollarization, this is the link to the story where Greece to leave dollar and leave euro and use dollar. Trump picked to be U.S. ambassador to EU. That's what that guy said. That's what got me off on my prologue at the beginning of this podcast. Pan Am Silver increases silver mineral reserves to 286 million ounces. Oh no, we're running out of silver. I guarantee it. No, we're not. It's a matter of price. That's just one company. It may be expensive to get at that silver, but if we were close to running out of silver, Pan American Silver has silver mineral reserves that it could tap, and so could many other countries, many other companies. Industrial production was down. That's very interesting. That's stagflation. Industrial production down, prices up. But the Fed Empire Index was up, so we're getting mixed signals. Retail sales were up, but the CPI was up 0.6%. So we'll see how the economy shakes out. Looks like there's some inflation on its way, price inflation. Kyrgyzstan, little country. It's got 5 tons of gold, but its central bank governor said his dream is for everyone in the country, each 6 million of its citizens, to have about 100 grams of gold, or about 3.25 or 3.5, depending on whether you're using metric, you're using troy ounces, or quote regular ounces. Anyway, he was saying that he wants his people to save in gold rather than in cattle. Interesting story. Again, we'll go through it. You can click on the link. You can go to the YouTube and check it out. More gold sales, silver sales at the U.S. Mint. Also, Germany, as a result of completing its or initiating its repatriation claim of gold from the U.S., has kicked off an international gold repatriation craze, which has seen the gold held at the Fed, not their own gold, but on behalf of other countries, decline from about 7,200 tons down to about 5,800 tons. Again, click on the links. You can check out the YouTube. We also did another CIA report on the year the United States went off the gold standard, which was 1972. And we covered the state of play there. Interesting if you want to learn about the Great Grain Robbery. You can click on that link or check out the YouTube on that one. And that about does it. Thanks again for listening. Remember to subscribe to Smaulgld.com, fill in your email address, subscribe to this YouTube channel, and follow us on Twitter. Thank you.